Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day. Homegrown Reliance Jio has positioned itself as the world's second strongest telecom brand. Last year, it was fifth in the pecking order. So what explains this rise? And how does Jio's brand stack up against Airtel's amid the 5G rollout? Bhashwar Kumar brings you the answer.
Speaking at the Reliance Industries AGM in 2020, Mukesh Ambani had announced Jio's 5G roadmap.
Jio has designed and developed a complete 5G solution from scratch. This will enable us to launch a world-class 5G service in India using 100% homegrown technology and solution. I dedicate Jio's 5G solution to our Prime Minister, Shri Narendra Modi's highly motivating vision of Atmanirbhar Bharat.
This announcement also gave a glimpse into how Ambani has built up Jio's brand image. Launched in 2016, Reliance Jio is India's largest telecom operator by market share today, and it is closing in on 500 million subscribers. Jio has made a conscious effort to associate itself with the government's flagship initiatives, like the Atmanirbhar Bharat campaign. It has also tried to position itself as an aspirational company that aims to bring cutting-edge technology to India. For example, Jio decided to opt for an advanced, standalone 5G network, unlike its rivals. Jio has highlighted these developments prominently as a brand-building exercise. It has tried to link the Jio story to the broader India story. And in the latest development, Reliance Jio has climbed up to the number 2 rank, up from 5th place last year in a list of the top 10 strongest telecom brands in the world. The list has been created by UK-based Brand Finance as part of its report on the world's 150 most valuable telecom brands for 2023. The rankings are based on a brand strength index score, which considers metrics like marketing investment, stakeholder equity, and business performance. Based on the scores, Jio is behind Swisscom. So, how has Jio built the strength of its brand?
Jio's success is unprecedented in the telecom industry across the world. In a very short period of time, it created a nationwide 4G network and provided services at the least imaginable prices that any new player has offered. In the process, it has now acquired the largest market share in India's telecom sector. And all of this is ample proof of why it is now amongst the top 10 brands in the telecom industry.
Jio has actually defied it all because a lot of people tend to say that a brand needs to be a specific thing. You need to be something for someone. Jio is not something to someone. It is everything to everybody. And it's all about the connectivity, it's the quality. If you talk about 5G, which is going to get rolled out, we're talking about the significant speed, possibly the best in the world, as is being claimed. So I think it's all about being top quality, coming at a price which is unenviable, and reaching out to every type of a person.
Jio has also seen its brand value rise sharply in 2023 to hit $5.4 billion, helping it to move from 32nd rank in 2022 to 27th in 2023 in Brand Finance's list of the most valuable telecom brands in the world. But Jio is still behind Bharti Airtel, which is 21st on the list. At one time, Jio had a higher average revenue per user or ARPU metric as compared to its industry peers. But in recent quarters, Bharti Airtel has left it behind. So it appears that Airtel continues to enjoy an advantage with premium subscribers. So what is the way ahead for Jio?
I think as far as Jio is concerned, it should not bother about being India's most valuable brand. It needs to bother about being India's most widespread brand. Because in India, ARPUs are notoriously low. And catering to the low ARPUs is actually building the base for a big brand. And I think that's what Geo is focusing on. So catering to the upper end of the market, it will come. Give it time, it'll come. At the moment, focus on being the widest, not necessarily the most valuable.
Jio will take time to catch up with Airtel ARPUs. So Jio, when it entered the market, saw that pretty much everybody with modest to high income had already acquired connections. So in some ways, it was the poor man's first phone and almost everybody's second phone for its cheap data services. All this will, of course, change over time, but it might take time.
But no Indian company has made it to the top 20 in Brand Finance's overall rankings of the most valuable telecom brands of the world. Verizon, Deutsche Telekom, and AT&T, which lead the list, have valuations between $70 billion and $40 billion, while Jio's valuation is $5.4 billion. Clearly, Indian companies have a long way to go. However, with their ambitious 5G rollout plans underway, there is a chance that at least Jio and Airtel could improve their rankings in the coming years.
As Jio and Airtel have set the ball rolling on 5G, the National Cybersecurity Coordinator has asked firms to increase their investment in cybersecurity. Rising internet penetration will indeed have its own set of challenges. Microsoft India head Terence Gomes recently told Business Standard that the country will need 1.5 million cybersecurity experts by 2025. He said that the digital explosion has opened more attack entry points. So, will cybersecurity drive large-scale job creation in India? And what are the challenges ahead? Tariq Ahmed's report has the answer.
The Minister of State for Electronics and Information Technology, Rajiv Chandrasekhar, recently told the Parliament that India witnessed 1.39 million cybersecurity incidents last year. From government to private sector to individuals, all are vulnerable to such attacks due to increased digital adoption. One such attack brought the country's most respected health institution, AIIMS, to its knees last December. Reports claimed that the headers of files that were encrypted by hackers originated from Hong Kong and China. The dark world of hackers operating domestically and offshore is also getting bigger, more coordinated, sophisticated, and ambitious too. Cybersecurity firm Kasper Sky recently claimed that cyber criminals are offering up to 16 lakh rupees per month to IT engineers to work for them. Employers on the dark web are desperately looking for highly skilled workforce, so are those on the other side.
There are 12, 15, zones and genres of cyber security threats that attack, and there are different ways in which the industry responds to it. But in all, there is no end to the number of varieties in which a cyber threat can occur, and the cybersecurity attacks are getting a lot more creative than what they were earlier.
At a time when major IT companies have hit the pause button on hiring or have delayed the onboarding of new talents due to global economic slowdown, cybersecurity space is driving the job creation for engineers. According to the Internet and Mobile Association of India, 900 million people will be using the Internet by 2025, and 346 million people in India already use online mode for money transactions. And with the adoption of 5G, the country will need far better cybersecurity and privacy practices. According to specialist staffing firm Exfino's report, the volume of active accessible talent in the cybersecurity and privacy space has significantly grown by over 40% over the last 2 years. There are several types of experts in the fields like application security experts, cloud security experts, etc. At present, 2.6 lakh accessible talent is available in the cybersecurity and privacy sector. But are these numbers enough for India?
there's a huge demand supply issue currently in play. And like I told you, these experts are very rare to come by, particularly the ones that you want to have multiple skill sets are very rare to come by. But then there is, like I said, the 260,000 people that we have, or 270 at this point in time, that is not sufficient. There are about 20,000 active openings as we talk in the cybersecurity space where there is demand, which means people who are currently already operating and having an active job are already being paid well, and they're being retained really well by the company. We are clearly seeing an 80 to 90,000 kind of supply shortage as we are looking, particularly in the 5G scenario that you rightly pointed, Tariq. The need for cybersecurity guys will become almost 3 times or 4 times what you currently have, because the sheer spread of the solution that you will be getting. Every device is going to be connected, multiple users. There could be 5, 6 devices per connected devices per individual that you need to manage, which means the threat potential multiplies that many fold.
So, what is the solution?
We spend less than 1% on cybersecurity, or invest less than 1% on cybersecurity in terms of our overall spending on e-commerce. So, which speaks for itself. And this problem has accumulated over years. And I think organizations like Microsoft, which is obviously a multinational organization working in the tech sector, the government itself, and also the educational institutions, we need a multi-pronged approach from each of these stakeholders to, on a very urgent basis, on a war footing, try and address this. Whether on the part of government, it's trying to provide incentives to organizations to invest in cybersecurity, maybe giving tax holidays or treating it as a CSR activity, whatever the government comes up with these kind of schemes, or on part of organizations in terms of trying to make it a part of their induction program, a part of their regular training program to educate and train their staff on cybersecurity issues. And obviously, in the society in general and educational institutions, I think everything begins there. So, in terms of sensitizing students, in terms of sensitizing college-going youngsters on handling various cybersecurity issues, or having a, as they call it, cybersecurity hygiene, or a good cybersecurity hygiene. I think that's what we need to develop, and that's what we need to really invest in, and that's the need of the hour.
Clearly, all the stakeholders have to ramp up efforts to deal with the increasing threat of cyber attacks. It will not just save us from unwanted hassles, but will also create more avenues for young engineering talents who have so far looked towards IT giants for jobs.
A recent NASSCOM report also pointed out that despite having the largest IT talent pool in the world, India lacks skilled cybersecurity professionals. Moving on, the weatherman has forecast a hotter than usual period between March and May across most parts of the country this year. At the bourses, summer-related stocks have begun to gather steam. So, should you jump on the bandwagon? Here is Harshita Singh's report.
Amid forecasts of scorching summer this year, Dalal Street investors are catching up on stocks of consumer durable companies, especially household appliance space. For instance, shares of Johnson Control Hitachi, Voltas, Blue Star, Symphony and PG Electroplast surged up to 28% last month as compared to a 1% decline each in the BSE Sensex and BSE Consumer Durables indices. Analysts are upbeat on consumer appliance stocks as they see a firm pickup in demand for cooling products like ACs, coolers and fans going ahead.
So historically, Q4 is a strong quarter for the consumer durable company. As per our early indications and analysis, this summer season could be the strongest year for the cooling products. Reasons are one is the early onset of summer, second, the rise in potential risk to El Nino. So we expect the entire basket of cooling products to do well. Also, if we see the post Diwali, there was a slump in sales, while due to new energy norms, the fans witnessed destocking. Currently, there is a strong build-up in the inventory in the channels in anticipation of strong summer. With the competitive pricing, and we expect the sector to do well.
Moreover, companies like Symphony and Blue Star have already begun to see a boost in sales on strong demand traction. Compton Greaves is seeing a pickup in demand for fans and expects inventory liquidation to gather pace as temperatures rise. Analysts also foresee a turnaround in margins for the sector in the ongoing quarter. With this, the correction in stocks over the last year further provides a good buying opportunity, they add.
The sector is likely to report a revenue and PAT growth of average 8 to 10%. It seems modest, but we should also consider the high base in Q4 FY22. These companies will recoup some of the losses which they suffered due to high cost inventory in last couple of quarters. So on a sequential basis, there is a strong margin expansion somewhere in the range of 250 basis points. Further, FY24 margin outlook also will have a significant improvement due to reduction in high cost inventory and price hikes. We believe that the entire cooling products and summer related products to do well. Also, the recent correction has provided an opportunity. Among our coverage, we have 3 stocks in coverage: Symphony, Havells, and Voltas. Given the pricing and mid category, Symphony is our top pick.
ICICI Securities expects the correction in prices of raw materials such as aluminium, steel, and high-density polyethylene to aid margin gains. This, it says, will be used by companies to raise advertisement and research spending and increase discounts to gain market share. Fair valuations and ease in margin pressures have improved the near-term outlook for the sector, and investors should selectively buy the stocks. Today, equity markets will track their global peers while the weekly F&O expiry will also sway the street's trajectory.
Bajaj Finserv on Wednesday said that SEBI has given it the license for starting its mutual fund business. The financial services company will offer a range of mutual fund products both in the active and passive segments. But what is a passive fund and how different is it from active funds? Here's a decoded. In 2008, Warren Buffett took everyone by surprise with a unique proposition. He challenged the hedge fund industry to enter into a bet of $1 million. And what was this bet? Buffett, arguably the most successful investor alive, believed that hedge fund managers couldn't beat the stock market average. According to Buffett, an S&P 500 index fund would give more return in 10 years than the hand-picked portfolio of a hedge fund. Prodigy Partners LLC's co-founder, Ted Seeds, accepted Buffett's challenge. The scheduled wrap-up day for the bet was 31st December 2017. But in May 2017, Ted Seeds conceded defeat. The active funds versus passive funds debate has been going on since their inception. Hedge fund is an active fund while the S&P 500 index is a passive fund. In active funds, seasoned managers invest your money in chosen stocks with an aim to get better returns than the market average. Backed by a team of analysts and researchers, these managers actively purchase, hold, and sell stocks to get maximum returns. Investors in actively managed funds pay higher annual charges for the expertise of the fund manager. It is usually anywhere between 0.6% to 1.5%. Sometimes even more. Passive funds, on the other hand, deliver a return that is in line with the market. Mutual funds and index funds are examples for passive investments. A beginner or someone who wants to avoid the portfolio management costs is more likely to choose passive funds because it involves less risks. And due to all of these factors, historically passive funds are more popular and have accumulated more investments than active funds. Passive funds involve a buy and hold mentality where the stock owner resists the temptation to react to stock market fluctuations. They need less supervision and are less expensive. Also, they are more transparent.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Passive funds are also not completely free from risk. They are skewed to automatically follow the most well-performing opportunities, overexposing investors' wealth to a small number of sectors or stocks. Well, that's all for today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.